Greetings, I'm Keith Klein, the host of the VentureFizz Podcast, where I interview the most fascinating people in the tech scene. This is episode 381, and today's guest is Mike Massaro, CEO of Flywire, a global payments enablement and software company. This is the full lifecycle story of an idea to a pillar publicly traded tech company in the Boston tech scene, and it has it all. An international founder who discovers a major problem while trying to pay his tuition at MIT, to Mike joining the company after its Series A, an evolving business model from consumer to B2B, navigating choppy near-death experiences to scaling aggressively, then raising multiple rounds of venture funding to an IPO and more. It really is an inspirational story for all entrepreneurs to hear, as it is never an easy up and to the right story. There is so much that goes into building a successful company, and this one does not disappoint. In this episode of our podcast, we cover lots of great topics, like a discussion around leadership and the importance of communication, Mike's background story, and how he landed at edocs, a successful Boston tech company that helped make electronic billing and payments possible, plus his experience at Carrier IQ, the full story of Flywire from the very early days, and lots of stories along the way to the company's eventual IPO, looking ahead at Flywire plus the culture of the company, the importance of a strong board of directors, hiring for leadership roles, and so much more. All right, now a brief word from our podcast sponsor, Silicon Valley Bank. I'm excited to share that this podcast is brought to you by one of the strongest longtime supporters of the local startup ecosystem, that being Silicon Valley Bank, a division of First Citizens Bank. SVB serves innovative tech, healthcare, and life sciences companies, including 60% of CNBC's Disruptor 50 list, 72% of Forbes Cloud 100 list, and 48% of Forbes AI 50 list companies. With more than 1,500 bankers and relationship advisors and $42 billion in loans through Q2 2024, SVB delivers the right people, service, and resources to support your entire financial journey. Learn more at svb.com. All right, without further ado, here is my interview with Mike. Mike, thanks so much for joining us.
Thanks for having me.
I'm excited to talk to you. We have so much to talk about with a great anchor pillar tech company called Flywire. So we're going to talk a lot about that company. But before I get into the weeds of your background and all the great work that you and your colleagues at Flywire are up to, I want to talk about leadership, which is something that obviously is so important. You know, you're CEO of Flywire. Leadership is so core to your role and how you've progressed throughout your career. So I just thought it'd be a great kind of sounding board here of like what advice would you have on how did you learn how to lead?
Yeah, I mean, I was fortunate to have a career in tech and be part of a couple of early stage tech companies that had great leaders. I started my career at a place called edocs, which was an e-billing and payments company based out of Boston. And so got to work with folks like Jim Moran and Kevin Laracy and Chris Gardner and Jeff Barnett, just some awesome tech titans in Boston. And I just got to see them lead early in my career. And then I continued on and was fortunate to have good leaders to teach me a lot of the things that I think are critical. I mean, for me, it's about servant leadership. It's about leading from the front. If you're not willing to go out and take that risk or take that leap and show the team how it's done, if you're just kind of a paper pusher, or a people manager, and you're not with those skills that your team needs to help succeed, I don't think you get the right skills to lead in this world.
Yeah, and how has your leadership style evolved over time?
Yeah, I mean, it's definitely evolved. I often say, you as you kind of go through different experiences, also as I think you just naturally age, you get more perspective of it. I think for me, I've tried to be more aggressive at just leaving nothing unsaid. It's actually my mantra for this year to myself, which is like nothing will go unsaid, because I think so many times you think people kind of understand what you're saying, or you believe you've communicated it fully. And at the same time, usually a lot of those breakdowns in communication or the clarity of that communication, either feedback or direction as to what's the top priority, the vagueness that happens just in normal day-to-day chaos can lead to a lot of consequences there. So to me, that's kind of probably been the biggest evolution for me, is just leave nothing, unsaid. Just get it all out there. There's too much going on for us to worry about poor communication.
Yeah, great advice. So you gave a hint as to your professional background. So we're going to dive into that, which I'm so excited about. I'm a historian of the Boston tech scene, and know the companies you work for very well. So this is going to be a fun journey. So where'd you grow up? What were you like as a child?
Sure. Yeah, so I grew up on the North Shore of Massachusetts. My dad was from Arlington, my mom was from Cambridge. Ended up raising a family up on the North Shore. One of three. So I got an older brother who's 9 years older and a sister who's 6 years older than me. So in many ways, like we often say, like my parents were at a different point of evolution. Like when they had me, I was kind of the somewhat of a surprise child, a few years later. And my upbringing was great. I mean, it was, it was a pretty rural area, mostly kind of big yards, lots of woods, a lot of bike riding on streets that I would never let my kids ride bikes on today. A lot of, running out, playing in the woods, leaving at, 8 a.m. on a summer day and coming back at 6 p.m. type of stuff. And being all around town, kind of on your bike, and just playing sports and having fun. So, lots of that as a kid. It was a great upbringing.
So you went on to study at Babson. So why did you decide to attend Babson College?
Yeah, I actually, believe it or not, started off in Villanova. I was thinking I wanted biology pre-med, and I was always into computers, always into tech. Even I was on products that some of your audience may know, CompuServe, Prodigy Online, like those
Oh
old
yeah.
school internet tech dial-up companies. And like that was for me high school, middle school, and like I was fortunate to have the opportunity to kind of get into computers early, and I just never correlated it to a profession. Like I always say when I went, I was in my high school, most of the people showing up at like the parent days for, career days were like, doctors, lawyers, accountants, insurance, broker firms, those kind of roles. And, tech, even though it was there, obviously in the 128 Beltway at the time, it hadn't really broken into the mainstream of, I would say, life in the 90s. Computers were coming, but they were still kind of an outsider kind of thing. And so I went off thinking I wanted to be a doctor for God knows what reason. And then I was fortunate. I remember being at Villanova and having a laptop like in 1996 or something, and being like, I think I'm like one of five kids in my undergrad class that actually had a laptop at that time. And
And it was
and
massive, I bet.
yeah,
Like,
it was huge. I mean, the thing was massive, right? But and that's part of the easy way to know you're the only one, right? Like no one else is lugging this giant thing around. And so like that was like a first indicator. And then obviously late 90s, you just started to have all the dot-com stuff hit. And it was like, wait a second, not only is tech not this kind of outsider chip mainframe kind of world, but it's like actually impacting day-to-day life of the world. It's going to change the world. And so I remember going home on a break and talking to my parents and being like, "Hey, I think I want to go more business and technology." And I remember them telling me, "Hey, you should go check out Babson." And my dad had done his grad degree there. I'd heard about the entrepreneurial program, and when I went to visit, the thing that hooked me was just this new curriculum they were rolling out, which was perfectly timed, and it was just around how do you actually help people learn how to build a company, and all the different aspects of running a business were not individual classes, but they were kind of one thread of your first year and a half at the school. And so you got kind of different case study perspectives from finance professors versus marketing versus tech versus law, and you kind of looked at it all around, all on the same, kind of case study. And so that to me seems super cool. They gave students in groups money to go build a company and run the company and donate the money to charity at the end of the semester. So it was a whole different world, and I was hooked when I went to visit. And so I was fortunate enough to transfer there and absolutely loved the experience.
awesome. All right. So getting your career started, PwC, what were you working on there?
Yeah, so I interned with PwC going into my senior year, and actually started doing work for them my senior year, part time while I was finishing up school. And it was a lot of kind of big end tech consulting. So it was really more on the consulting side. So it was going into big banks, doing security, kind of mainframe audits, upgrades of tech, that kind of stuff. And it was a great experience. I thought it was really cool to be able to kind of go into these kind of big corporate environments and help them kind of transform. Um, but my PwC time was kind of cut short. I went to visit a buddy who graduated Babson a year ahead of me. And he had just started work at a company called edocs that I mentioned earlier. And he was, should have given me an indication, but the product wasn't working right. He couldn't do lunch. He came out, apologized, had to focus on kind of this fire drill of fixing the product. And I was kind of left to my own in the office, and a bunch of people were nice enough to kind of show me around. And so we never had lunch, but by the end of, a 20-minute tour, I had a job offer, and people were like, "Hey, you shouldn't go work for Pricewaterhouse. You should come here and do a startup." And so, was kind of, again, hooked on what I saw was probably 50, 60 people at the time trying to disrupt what was a paper billing and online and check payment process and put it all online. And to me, it was like an example of like, wait, technology could actually change literally how all the bills are delivered in your mailbox, how you sit down and write a piece of paper, send it back in the mail, and how costly and crazy that whole process was, and how much more efficient and digital it could be online. And so that was kind of what hooked me. It was like applying technology to a real world problem that, you could see and that you knew was almost inevitable to change. And trying to build something that everyone told you was crazy, right? Like people were saying you can't do it this way, can't do it the way they were trying to do it. And so I ended up going back to Price Waterhouse and saying, sorry, I have to go roll the dice on a startup. And I was fortunate. My mom and dad, again, didn't think I was too crazy. They
Right.
said, you won't go hungry. You'll always have kind of a roof over your head. If you want to take a risk, you should take a risk. And they could have said a lot of things. And if they had said something different, I probably would be doing something different. But rolled the dice on a startup, and it was a great, I would say 5 years of the start of my career. Just amazing opportunities, amazing team. It was a lot of fun.
So I had Chris Gardner on the podcast not too long ago, and we had a deep conversation. I'm like, Boston doesn't always take credit for the level of innovation
For sure.
that it creates. And online bill payment, edocs, I don't know, I'd have to go through trademarks to see like who were the original inventors of that. But they certainly, edocs was a major player in making that actually happen.
For sure. Yeah. And everybody at the time was debating, like, are you going to go to a centralized service to make payment, or are you going to go to the brands, like Verizon or AT&T or American Express and have your relationship with that brand? And our software is all around making those brands agile and getting them to have the presence online of e-billing and self-service. And it really transformed the whole kind of space. And ultimately, that's what people do. The vast majority of people still have those direct relationships with the brands that they use to make those payments. And it was a great run. I mean, I started off there as a front end web developer. I was implementing the software for a bit. Which was obviously very web-based, got reluctantly pulled into being a sales engineer. I often tell people it's because we were such bad front-end web developers that the demo we built looked pretty, but it never actually really worked all that well. And so like you had to know where to click to actually demo the new version of the product. And so like I got pulled into all these sales meetings where I was like, the young 20-something sales engineer going in and doing the demo. And I didn't realize the exposure it gave me to just execs at some of these companies. I was sitting in the room with some of the top execs from Verizon and AT&T and T-Mobile and all these amazing places, and also getting to work closely with the exec team of the company, which was also a huge learning experience. And then I was able to go on, move international to London with my wife before we had kids. I helped a guy by the name of Jeff Barnett, who was super successful, going on to do great things at Demandware. Jeff was expanding international operations for edocs, and I got to pretty much bounce around Europe with him and just learn from him. And it was an amazing experience. So it was an awesome run. It ended up doing a product role at the end when we got acquired by Siebel and Oracle. I was hooked. At that point, I knew I was hooked on kind of tech companies and disruption.
Well, I mean, things like fate happens, right? Like it's not like I'm going to go work at a startup and you were, had 5 that you were interviewing with and you chose the one winner. It just was organically happened. And the team there was phenomenal, which I need to do like a whole like VentureFizz post about the alumni of edocs, because everyone's gone off to do amazing things. And like I know the company so well because I started recruiting in the tech industry in '98. So I'm only telling you this because you were PricewaterhouseCoopers. My job, I came out of KPMG as a tax consultant. They hired me because I had that big 5 or whatever background at the time to recruit people out of those management consulting firms to place them at the edocs companies because that they're all growing and building out their services function. So I'm not sure if I ever called you, but it's possible while you're at
Maybe,
PwC. And
maybe
I
back in
remember
the day.
edocs had their lava lamps was like
Yeah,
their
that was
thing.
it. Still
So
have mine. Yeah, still have
still
mine.
have
Yeah,
yours. Yeah, Chris
yeah, I
has
still have
his
mine. Yeah,
too. So all right. So you went off to Carrier IQ. So what was that? What did you do there? What was
yeah.
that company all
So
about?
yeah, sure. So we had done the Siebel, and then Siebel had acquired us, and Oracle acquired Siebel. So it was kind of this 200 plus people to 5,000 to 55,000 experience, which was a crazy experience to go through. Just seeing kind of how big companies do acquisitions and how they bring people into the companies. Um, I knew Oracle was a great place. I also knew like if I stayed there, I'd probably stay there a long, long time. And many folks at edocs did do that and had very successful careers. But for me, I was like, hey, I gotta go back and do something early. The COO of edocs was offered the CEO gig at a newly started company called CIQ out in California. He went to three of us and said, "Hey, I need pretty much a go-to-market and a kind of an engineering go-to-market team to make this work." It was great tech that was really going after different problems. So if you think of the billing problems at a lot of the big wireless operators, like everyone was calling customer service for billing questions, right? Like how to pay a bill and stuff. When you deflect all those away from the call center, you don't have those. But what you did have is you had the launch of the smartphone happening kind of in that '06, '07, '08. So the phones were getting more complex at that period of time. The wireless operators weren't sure how to deal with it, how to support it, and no one had any data anywhere. And so what CIQ had done is they had built really cool tech that helped both the smartphone manufacturer as well as the wireless operator understand the customer experience better and give that data to different parts of the ecosystem. So you could understand how the handset was performing, you could understand how the network was performing, you could understand if there was a customer service challenge that needed help resolving. And so that was pretty much 10 engineers or so when we joined. Had just raised kind of a seed round of capital. And it was really fun to kind of build it up. So I was in building up the go-to-market function, pretty much all sales funnel, rev ops, all the pre-sales, all the marketing material. So pretty much had all the kind of go-to-market function. And then we built up a enterprise sales team, and so pretty much went selling all these large wireless operators and handset manufacturers. And that was about a 6, 7 year run. Ended up getting acquired by Nielsen, which had a RF measurement business, and had one of its biggest customers, AT&T, as well. They ended up taking a bunch of the team internal. So it was a good, successful run. It was another great experience in kind of enterprise software and analytics in particular.
Selling to the large carriers must have been like long and painful. Like that is not an easy
It
sell.
was long. Yeah, and not to mention you actually couldn't deploy it without actually embedding it pretty much at the chipset level. So one of the coolest parts was you got to see all the upcoming tech that was being launched prior, 6, 9, 12 months prior to it. So like you were, at the time we were always carrying around like 3 or 4 smartphones each, all the different latest tech, the launch of the new Android tech. You got to see, the emergence of the iPhone, which just disrupted everything. It was a really cool place and a really cool time to be kind of at that intersection of, we were always big BlackBerry users back in the day at edocs, but to see the evolution of the smartphone and be that close to it at Carrier IQ was pretty cool.
All right. So what do you think your like biggest lessons learned from that experience was during that time?
Yeah, I mean, I think on that one, probably the biggest lesson was like the view of the tech and how unique the technology was, and yet how complex it was to get it out there. To your point, like you had this long sales cycle, you had this extremely long, like almost follow-on sales cycle. So you would sign these 10, 20, $30 million deals multi-year, and you would just start, and the actual launch of the tech could have been another 6 or 9 or 12 months later even. And so that was it had to be that way because the way the industry was at the time. But it was really hard, it was really complex. Like there were way easier businesses to build than that one. And so it was one of those kind of, wow, we didn't quite think through the length of that deployment, right? And the amount of capital and all the stuff you'd need to go on that kind of journey. It was that part was very intense.
But I guess the flip side of that, once you're there, it's hard to rip you out.
Exactly, and it's critical. The data is critical, right? And so it's the embedded nature of the tech,
Mhm.
and the values of that embedded nature, but also the question of like, hey, can you figure out a way to get embedded without 2.5 year deployment times?
All right. So Flywire, which when you joined was peer transfer, right?
It was, yeah. So, we had QRIQ had kind of gotten to that that end stage with the sale. And one of the things I always wanted to do, I'd been doing a lot of traveling. The company was headquartered in Mountain View, California. And I wanted to get back to Boston tech. So at the time, like Boston tech companies were kind of competing. Everyone was saying New York was killing Boston in venture, if you remember back then.
Hmm.
And I just kind of still had this belief of like Boston has a lot to do and a lot of great companies have been built here. A lot more great companies are going to be built there. And so I kept looking for Boston-based companies. And actually, believe it or not, the buddy I went to visit at edocs for lunch that day, I tried to get him to not join Peer Transfer. He joined as like employee number 5, heading up product, and he had 2 young kids, and barely had a salary, and then probably 6 9 months after I tried to get him not to join because I thought it was career suicide, I ended up joining him and joining that founding team. So I came in originally to head up sales, marketing, and business development. And the founder was a Spanish student, had trouble paying MIT a tuition bill from overseas, and so he pretty much had operations and product and all the other parts of the business. So came in as the first VP in the company, and really brought a lot of the skills I had learned from edocs and CareerIQ, which is how are you going to operationalize the go to market. Um, Big believer in revenue operations. It was one of the secret strengths of edocs. Just how do you look at that enterprise selling function and that pipeline, and how do you drive pipeline and drive growth through that enterprise selling function? And I was doing that in an industry that, for some reason, was left behind from the e-billing evolution that I had been part of at edocs. Like, it shocked me what the e-billing experience was like in higher education. It almost looked like it was late '90s tech, and then the experience for the international parents and students was just awful. It was pretty much like, here's an account number and a routing number, go wire some money and hope it gets there. And so the whole entire process was super broken. And so it was kind of fun because you're revisiting something you thought you solved,
Right.
a decade prior, and then you realize like, no, like we actually sold edocs probably early in the evolution of e-billing when you really think of all the evolution that still was left to be done.
Yeah. So the founder Iker, so he attending MIT Sloan, and he's an international student trying to pay his tuition bill, and but it gets like hung up. There's like fees, incredible fees, and it just is like in today's, well, I guess we take for granted what is today, right? But this was what, back in 2012,
Yeah,
around that time
2011.
frame.
Yeah, yeah,
Yeah, 20.
2011,
So
2012.
so this still was a thing that had to be figured out.
Yeah, yeah, for sure.
So I mean, the international like transfer of money was just not an easy thing to make happen. And
Yeah.
like you said, wire transfers and all these things.
Well, and often we'll say, like, if we knew how hard it was, we probably wouldn't have started back then, I guess.
Mhm.
Because, you immediately start and you say, okay, great, we got to go get, someone to process all these payments. And then you realize, no, 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 there's a reason why this is so hard. It's because there's no bank that has that global receivable network set up that way. It's actually very easy to send money to a certain place, like from a major currency market to another major currency market. Like, the send isn't hard, but the collecting money all over the world in many, many markets is really, really hard. And so, we're running around trying to like build out how are we going to process these payments. It's one thing to build the software layer that communicates better to the schools system of record and the payers and the students and the billing process. That's kind of one level of complexity. But when you actually get to, okay, now who's going to actually touch the money and move the money, it became like a whole nother level of compliance, risk, global regulation, complexity that, in all honesty, if we knew the level of complexity that existed in it, we probably wouldn't have gone there. We just assumed there'd be some bank that would do it for us, the processing side, and just wasn't the case. We had to build out the infrastructure ourselves.
Wow. Okay. So I didn't realize that. You had to build out the whole infrastructure yourself to
Yeah.
make that happen. Wow.
Yeah.
Okay.
So even today, it's this business now that moves, tens of billions of dollars a year, but it's a software layer, and that software layer pretty much sits between our client system of record and their payer, person who's paying them. And we streamline that. We tailor it by industry that we serve. But then all the money movement, whether it's going over a credit card, whether it's going over Alipay or China Union Pay in China, or online billing in India, all of that money is clearing through Flywire infrastructure of owned and controlled accounts and relationships, in 40 plus countries. So it's it's a complex system where you've got the software part, but you also actually have the operationals of the money movement, the compliance, the risk, all that as well.
So there's the component of clearing the money that's very complex, but you have to also have people use it, like the parents, the students, so there's the consumer, and then, there's so many parties involved. Like, how'd you even get started of, like make schools aware of it? Was that like your go-to
Yeah.
market? Like, like, how did you get
Yeah, the
things going?
original, yeah, it's interesting. The original go-to-market was actually direct-to-consumer model, and actually the thing, when I came in, one of the things that we started to focus a lot more on is, I remember the challenge at edocs, which is like, hey, if you get the biller, right, and the biller makes you the way to pay, like you kind of get all the payers, right, or you get that, you're either looking for a needle in a haystack, trying to find that family that's sending their kid abroad, and trying to do that kind of individual consumer targeting in places like China, India, the UK versus Europe. Like that's very complex in different markets, different social media platforms. Someone has to trust you in a relationship to send 50, 60, 70,000 US dollars with your company, and you're not even operating, not a known brand in those companies. And so there aren't many global companies that have that level of brand, maybe Coca-Cola, right, that are known in that many countries at that level of depth. And so to think of trying to build one of those was nearly impossible, right? And so we quickly pivoted and said, hey, if we're going to be successful here, we got to get the universities, and we have to have enough of the value prop tied to automating the process at the university and making an experience great for the payer and the parent, right? And if we could do those two things, we thought we could be successful. And it wasn't always, a smooth ride. It was quite a bumpy journey early on, but we were able to, build up that education business first, and then since go global, add different industries, all based on the same premise.
And like, what was the revenue model at that
Yeah.
point?
Yeah, early on it was we had it was crazy. We didn't Software had no fee to it. We actually even had a flat rate on a per payment basis. And the irony at the time was like we weren't even pricing for major, minor, exotic currency variations. So like someone who was used to an exotic currency margin, right, in an emerging market would all of a sudden see it like a super cheap price by us, because like we didn't even have the dynamic pricing to price different currencies. And so like sometimes we'd process payments and we'd lose more money on the payment than if we didn't process it at all. And so it was really hard. That infrastructure part had to really evolve for the business model to really take off. And it was a combination of just having that dynamic pricing by currency pair so we could be competitive in the local market, but also make sure we were, making good money for the value we were providing. And then also we added in more software over time so that we diversified the revenue stream to where it is today, about 80-20, where 20% of the revenue is actually software-based fees, and 80% is transactional.
When you joined the company, like, how many employees? Like, had they raised capital yet? Like
Yeah,
you said, your
yeah,
buddy was there, but
yeah. So they had raised a seed round of about 600K. They had raised a Series A of about just over 6 million, 6.5 million.
okay,
And so I joined a couple months after that, 6.5. So
okay.
their Series A was done. I would say they had their first handful of customers, so first lighthouse accounts. But it was probably, somewhat pre-product market fit. Product wasn't rolling out as quick. Wasn't, it was hard because you were processing tuition payments, and those tuition payments were kind of only due at a couple of peak times in a year. So you can imagine, like, outside of December, January, July, August, maybe a little of September, it's pretty quiet, right? Like their payments, onesie, twosie payments would come in, off cycle payments, but the big billing cycles were very calendar specific and cyclical in the education sector. And we were only serving US universities, and they all kind of had the same billing due dates, right? Like if you go to different countries, you'd have different billing dates. But when we were only US, you really had all it concentrated, like 80% of the revenue was concentrated in like 6 or 8 weeks of the year. And so it was this, work hard on the product, get ready for this peak season, and then hopefully you got it right and the product worked and the network worked. as you expected. And so that made it hard. So it originally, when I joined, it was probably about 30 or so people split between Boston and Valencia, Spain. Valencia was kind of an operational center, plus it was a tech hub for us. And then Boston was really product sales, go to market, and that's how the company was organized. Partially because that's where the founder was from, partially because it was also cost effective to build the company that way. And so it was, maybe about 50, 100K of revenue when I joined. So it was pretty small.
And in a short time frame, you eventually became CEO of the company. So how did that transition take place? Because obviously you were on the board then. So
Yeah.
like, what was that evolution like?
Yeah. So the founder was the sole founder. I remember we were trying to raise a Series B round of capital, and he had struggled to raise the Series B. And part of it was I often say the business did not perform like the spreadsheet told it to. And so, as you kind of hit product market fit, you started to have this kind of revenue ramp question of like, okay, great, we now are getting customers, we have this predictable revenue ramp in RevOps. But when you looked at actually when the revenue was coming in and the percentage we would get of the revenue we expected, you wouldn't, for instance, if you didn't have a bank account in a certain country, it's hard for you to make money on the payments coming through that country, right? And so it was a much more complex revenue model than we expected. And so the revenue was slow to develop. And so the Series B was hard, a couple 100K of revenue, and the burn rate was, millions of dollars. And so you're going out asking people to invest millions more in a company that had a pretty significant burn with this hope that, yeah, we'll eventually get over this and we have enough product market fit traction. And it was really hard. Probably, founder probably met with 100 plus venture firms in the Series B, just tons of, no's, not now, next time, and very quickly realized like, hey, we didn't have enough cash to kind of keep operating, back in 2013, spring of 2013. And so had a meeting at Spark Capital. I can remember it super vividly, where we pretty much went into Spark and said, "Hey, this is the cash position of the business." And thankfully, you had Alex and the team at Spark that sat there and said, "Hey, come back Monday, management meeting. Let's talk through like what are we going to do? Are we going to shut the thing down? Are we going to sell it? Are we going to try and find a way to raise a Series B, even if it's smaller than we expected?" And so that conversation happened Monday. They offered us a bridge note to keep going. And we actually went down the path of all three of those things, right? We tried to figure out if we had an asset we could sell. We tried to figure out if we couldn't sell it and we couldn't raise, we'd have to shut the company down. And Spark was always a big believer, like, hey, if you're going to shut it down the right way, right? Like take care of the customers, take care of the people. And so we were really fortunate. That summer was crazy. We came out of the summer with an offer to sell, and we didn't actually have any investment offers until the fall. And then we had an offer come in from F Prime, which was kind of a spinoff of Devonshire, part of the Fidelity family that had done biosciences and fintech investments. They'd started F Prime and built that team to do that. And they had started a fintech fund. And they said, "Hey, we heard you're fundraising. We'd love a meeting." And we pretty much, we're like, "Hey, probably not worth it. Probably going to sell the company." And they asked us to meet them, and we met them. And they fired in a term sheet and said, "Hey, we think you should keep going. We think you have the potential to get to the next level." And that became kind of part of a foundation of, we strung together a lot of different funds into what was a $12 million round, but relatively small checks, probably $2 or $3 million checks from 4 or 5 different firms. So again, you didn't have that one kind of major conviction player. We had to string it together. It was hard, and that gave us a choice as a board to say, are we going to go for it, or are we going to sell the business? We'd only raised $6 million and had a chance to sell it, and return money, give a decent return to employees and shareholders. But that was a hard decision. Ultimately, we decided to go for it. The founder, his wife was pregnant. He wanted to move back to Spain. And I still remember he sent an email on a Friday afternoon. Mike should be the CEO of the company. And I was like, oh, could have done a phone call to tell me that before he actually suggested it. But then it became a conversation at the board level. I said no. I said no probably 2 or 3 times before I said yes. Just, it was a tough run, right? Like I had 4 kids under 7 when I joined the company. It obviously was earlier than I even imagined at the time. But at the same time, we had a great customer base. We had hit product market fit. Our team was awesome. And it was in a space that I loved in fintech and payments. And so uh, it was something the board convinced me like, hey, this is your shot. You should run something. And I didn't think I would inherit something. I figured I would have, started something from the beginning. But it was a great opportunity. And, now it's whatever, 11 plus years as CEO. It's kind of crazy.
I hope you are enjoying this interview. Just a brief word from our sponsor. As a longtime champion in the local startup ecosystem, Silicon Valley Bank supports innovative companies with the solutions and financing they need through every stage of growth. With more than 1,500 bankers and relationship advisors and $42 billion in loans through Q2 2024, SVB delivers the right people, service, and resources to support your entire financial journey. Learn more at svb.com. What a great story. Yeah, that's why I was so excited to talk to you because I'm like, there's got to be something there. Because like you played long ball and it's, we're going to talk about the IPO and everything. But so you went on to raise a Series C from Bain Capital, led 22 million. So Matt Harris, right?
Yep.
And then
Yeah, that was only 15 months after the near death experience with the
okay,
Series B. And part of that was just focus and I would say making sure like we always had this long vision of things we wanted to do, more products, more industries. And having that near death experience, one of the things that taught us to do is just focus, right? Like we'll have a chance to do other industries, other geographies, other products if we're successful and great at the one product we have now. And so we kind of put all resources back to that, right? We stopped getting distracted with second, third products, trying to make up the revenue gap. And we just said, we're just going to make the best version of this product, the best payment network we can. And that turned into, I would say probably 9 months later, having a couple months of profitability during our peak season. And then we still had about 8 million of the 12 left. And we kind of said, hey, should we go? We were probably on a $5 million business, $4 or $5 million of revenue. And we kind of thought we could do 10 plus million the next year. And that had us kind of contemplate, should we go raise a Series C to kind of invest behind growth and go do more, give us more capacity to go invest differently. And we closed that round in 6 weeks. It was very different. The Series
wow.
B took 12 months and almost didn't close. And the Series C took 6 to 8 weeks over Christmas and Thanksgiving. It was pretty crazy.
So when was the point where you just knew this is like a legit business? This is an opportunity. Like, did you just get massive adoption from the universities, or like what was that final straw that broke the camel's back of an explosive growth business?
Yeah, I thought, there was definitely a validation moment that happened with the Bain round, right? Where, you had 8 million, then you got 22, you had pretty much $30 million, and you had a business that you started to see go on a $10 million ramp with multiple months of profitability. So like that combination was like, okay, like most companies don't get to this point and have this amount of capital to go figure out how to do the next, 2 or 3 ideas. And so that was kind of a major validation point of like, okay, and that was only 18 months from near death, right? So that felt really good. I would say kind of coming out the other side of raising the money from Bain, we raised it to really accomplish 3 things, right? Try and go global with the product, go outside of the US universities, add additional product capability so we could upsell existing clients. If you only have one product, you can't upsell clients anything else. And then also to figure out if there are other industries that had trouble processing large complex payments. And in the Bain pitch, you can go back and look at the deck, like we thought one of those ideas could work. And those were the 3 things we were going to go try. The reality was all 3 of those things worked, right? And so that is what, once you started to see all 3 of those things work, you start to realize like, actually, this could be a pretty big business, right? Like all the things we heard about from everybody that, oh, you can only, education payments, it's a small area, US education payments, it's small, cross-border only, it's small. We could process all tuition payments now with additional product capabilities. We proved we could sell to universities all over the world. And now we had a global market that we actually knew how to get and we're actually making traction in. And then we went into other industries and said, hey, we have the network. We kind of know the software layer well enough, and we can apply it to these other industries and build multi-million-dollar revenue businesses. Like once we knew that combination of 3 things, we were like, okay, we got to reset our view of how big we can make this thing. And that was super exciting. And that was probably around that that Series D round with led by Temasek, which is some sovereign wealth fund of Singapore.
Yeah. So now we're talking growth rounds. We're talking 100 million
Yep.
round of funding, Goldman, 120 million, a Series F. I'm looking at Crunchbase, Series
Yeah, yeah.
F, a 60 million.
Crazy. Yeah.
So like what other industries were, ripe for this disruption did you expand into?
Yeah, so there's a whole bunch of additional sectors we looked at. We were looking at things that were, high value complex payments, had some industry focus, and so we quickly found healthcare. It had a lot of academic medical centers. They had challenges getting paid from all over the world of patients coming in for certain treatments, and then we realized there's a huge domestic payment problem in the healthcare sector that we probably all know about. Just really confusing billing process. And so that was how we kind of got into healthcare. We initially started looking at all types of businesses. We had what we called the commercial segment at the time. That emerged into two things. It emerged into our travel business and then our B2B business. We kind of split them out. We started just getting all types of businesses interested in our product and our payment network. And we started to realize, wow, there's a lot of travel companies in here. And so we said, hey, instead of going and talking to just random companies across all these different sectors, we knew the industry focus was important. People like to see, talk to people that knew their industry really well. They like to see the product evolve that was tailored to their industry with the features that mattered to them, not a generic product that they were trying to apply to their industry, and they had to customize a lot. And so we carved out the travel team and built out a travel team, and they started to have just tons of success, just talking to travel companies all around the world. And then we had our B2B team launch, and they started again looking at segments like insurance, manufacturing, franchises, professional services, all these different kind of sectors within business to business payments that we thought we could help with. And so that's really how it started to evolve. And again, we knew that we had, maybe 80% of the software asset, and we had, nearly 100% of the network already built out. So it really was about tailoring the solution for those industries, firing up the sales and marketing engine, and then also looking for the key platforms of integration that we had to do into products that mattered for our clients. So if they wanted us to interface into a new product, we needed to be an expert at that new product and get that interface done right to make the deployment go smoothly. So that's how we did it, scaled up the business.
Such a great story. All right. So you're growing, raising growth rounds of capital. At what point do you decide, hey, this is a company we can take public? And what was that process like and that
Sure.
day?
Yeah, so we often joke here, like we celebrate for about a millisecond on anything, and then get back to it. So we had just closed, believe it or not, the Goldman round, first unicorn round, and that was late February of 2020. And so I think it was right before kids' vacation week here in New England. And we kind of all went away like, oh, we accomplished it. We acquired one of our biggest competitors in the healthcare space that same week. And then COVID hit, and we quickly realized we were running thankfully we had some capital because we had just raised that round. And at the same time, we were running an education, healthcare, travel payments company in the middle of a global pandemic. So it was like very quickly, you're like, okay, you just had this success, all these articles written about next, unicorn. And we're sitting here going like, how much of our revenue is going to be cut? Like 50%, 80%? Like, how bad is this going to be for us? And so you're quickly moved right into just, kind of wartime mode of how do we protect the company? How do we make sure we're making the best decisions we can? How do we support our clients, right? They're going through absolute chaos at the universities, at the hospitals. Our travel clients were losing like all the bookings for like all the trips coming. They had no revenue. And so it was a crazy time, and of course all our flymates were going through the personal challenges of COVID, and we have a global diverse team, right? So that we were fortunate because we had a skill set of being able to work virtually that we had already built up, having Boston, London, Valencia, Singapore offices at the time. But like this was really testing us of like, can we run this company like completely virtual? And so all that happened really in 2020, and we'd done all the kind of disaster planning of the impacts to the business. And what we realized is as we got into July, August, September, we saw delays, but we saw the world starting to come back. Like even universities, they delayed billing from July to August or August to September, but they still most schools figured out how to do virtual or how to have some mix of in-person or virtual. Hospitals started to figure out how to treat COVID patients, but also to start elective procedures again. Travel companies started to realize, hey, we can't get international travelers here, but we can market to domestic travelers. And people want to do something in a safe way if they can get outside. And so we started to see our businesses start to come back and the payments volume start to come back. And we finished 2020 with about a 15% growth rate. So like we were here thinking our business was going to be cut in half, two-thirds, and it still grew. And so part of that just showed the resilience of the model, the fact that we were embedded deeply in these businesses' workflows, and our revenue grew. We also realized you signed customers the year prior, and those customers go live. And even though they were going live in COVID, they weren't getting as much volume as they would have gotten outside of COVID. They were still getting volume and they were still driving some level of growth. And so it was really good to know you had this kind of baked in level of growth from the prior year client signs to go lives. So those were big lessons for us. And as we finished the year, we had a board meeting. The market started to open up. We started to know other companies that were making it public, especially in the fintech sector. And we said, hey, we should consider this process. And I had never done it, been part of it through acquisition a couple of times, a public company, but had never gone through the process. We were fortunate. We had great lawyers at Gunderson. We had, great folks at EY and PwC that were helping us through the process. And we started it really in January of 21. And our first goal was to try and get out before the summer, but we thought, very low probability. We thought we'd probably have to wait till September, just with all the prep work. And we hit kind of every green light and got it out in May of 2021. And so thankfully, we actually got to ring the bell with, a bunch of people. We still had masks on, but, maybe 2 or 3 weeks prior to that, you had, lone people, lone CEO or founder ringing the bell on stage by themselves, and it didn't seem like a lot of fun. So we were able to actually get, probably a team of 50 or so to New York, all outdoor, all social distancing, all with masks. But it was pretty awesome to ring that bell just about 4 years ago.
I saw the picture. I'll have to put it in this episode so that people will see what that was like. Okay, so now you're a publicly traded company, right? And this is your first time being the CEO of we need to report quarterly earnings. And
Yeah.
how did you understand, how are we going to balance kind of like the short-term expectations of the market versus long-term where this business can really go?
Yeah, for sure. I mean, for me, there's a couple interesting things. Having done so much private tech companies in the past, like to me, this was the next challenge, right? Like, in many ways, it's Major League Baseball, right? It's, the Premier League, whatever you want to say, right? It's like, it's that next level of performance, and only a certain set of companies even get the chance to do it. And so to me, that was exciting. It was exciting for the team. And I think, going public wasn't just for us kind of that, that kind of personal marker. It also helped raise the profile of the company, right? When you're sitting there being asked and trusted with billions and tens of billions of dollars by clients, being a public company and a known kind of public brand is something that, we knew would benefit the business, versus kind of people saying, oh, you're a private company. Are you financially sound? Now they can see you financially sound. You can see the capital in the business. And so we knew that was going to be a positive for us. And so as we got out there, the challenges were, we had some, starts and stops where we realized quickly, if you don't coordinate timing of a board meeting with timing of earnings, it gets very painful. You do 3 times as much work. So there were some really tactical things we learned of okay, that was really painful. Let's not do that again. But ultimately, what we found was investors in a public context are, not that dissimilar from private investors, right? There are great private investors, there are great public investors, there are, the wrong private investors for a given company, and there are the wrong public investors for a given company. And so it was really about understanding the different investor types, understanding if they're kind of long-term investors, near-term investors, what they valued, what access they wanted to, the company to understand strategy versus product versus financial performance and metrics. All the different investors have a different understanding of what they value the most in that combination. Some heavily value the team. And so they want to get to know the executive team, like like a private company would. They want to know the different people running the different divisions. Others just look at the financial metrics alone. And so, we had that learning to do as a company. But, if you look back, in the IPO plan, to see what we've set out as an IPO plan and to see us kind of significantly beat that plan kind of 4 years in is just, it's a major milestone. And it also kind of shows the company has that staying power to kind of ride the ups and the downs of, global economy and the public markets. And, it's always better to look at the board and see a green day than a red day. But at the same time, it's about the long-term potential of the business and our ability to keep growing it. So yeah, I mean, we look at the business today, over 500 million of revenue. Um, we guided this year to over 100 million of EBITDA. So I mean, it's a big, it's a big growing business that we think is a pretty strategic asset in fintech and financial services.
So what are you excited about looking ahead?
One of the things that keeps me going is just the ability to see the team continue to deliver kind of amazing things. And whether you look at our travel business now that's grown into our second largest business, or you look at some of the products we've rolled out that again were complete innovations. We found a way in education payments to digitize these 529 payments that have been a disaster for anybody that's used a 529 to pay for a kid's tuition bill. Super manual, complex, delayed process. And we've just digitized that and process over $2 billion a year in those types of payments. And so we keep finding ways to innovate and solve new problems for clients and open up new aspects of the business. So that to me is super exciting, right? Like that's what it's about: driving value for the customers, making their ability to run their business better and easier. And then it's the personal development, what seeing our team has grown and changed. I mean, people who came in as interns who run businesses now that are tens of millions of dollars of revenue, people who are in as account managers or customer service reps that have had all these amazing careers inside the company and have built their careers at the company. To me, that's probably the biggest part. And it goes back to a lot of, the beginning of our conversation, a lot of the lessons we talked about how do you build a company that has a strong culture. And having been at a place that had that many times in my career, to be able to do that again here and do it at scale has been pretty special.
So what is it like working at Flywire? What's the culture like?
Yeah, I mean, the culture, we get 6 shared values that are up on the website. It's one that focuses a lot on, execution is one of them, right? We believe in strategy, but at the end of the day, you got to get up and go move the ball down the field. You got to put one foot in front of the other. You got to go execute. You got to go deliver. And so I would say we typically lean more towards that kind of, execution mindset and kind of that hard work that goes into executing. It's a global business, so the culture is inherently global. 40 nationalities inside the company, over 30 languages spoken inside Flywire. So, I always say if you don't want to work in a global company, we're not, don't come here. There's different time zones that adds complexity to it, but you also get this amazing team that's all around the world that is all working kind of along that same mission, and people that thrive on that kind of global nature, love travel, love to meet people, love to see different places. They typically do really well here. And then I would say it's also one that we've tried to continue to layer in. And a lot of people said you couldn't do it at scale, but one of the values we think about a lot is authenticity, which is just this directness, right? Of transparency, directness. And as companies got bigger, my fear was you would lose that, right? And of course, there's always things you can't share of certain things, and you have to be cautious with information. But we've maintained, I think, a very open, direct dialogue where still hold the all companies, still answer any question people have, and those all companies. My mobile numbers out there, my WhatsApp's out there, I don't know, I'm sitting in a little cubicle here in the Boston office. Like, I don't even have an office. I have a stand-up desk that is in the middle of the office on the floor. So it's a very kind of direct, transparent environment. And I think that's, to me, been the most important part. Is making sure you don't just add those layers of bureaucracy or distance yourself as an executive from what's actually really happening in the business as the business scales. And so even though we're 1,200 people today, it's pretty flat organization, pretty transparent and open culture.
So I can't leave a conversation without bringing up the term AI. So, so where do you see that applying to the industry or your business?
Yeah, I mean, it's there's so many great articles out there right now of like the importance of it. Um, I think every company is struggling with just the amount of tools that exist and are being released every single day, and how do you incorporate them and yet focus on data protection and making sure you're being smart about all of that. But no one wants their model trained on all their client data or personal data. So like there's a lot of security and stuff that is important to layer into it. But for us, we've said internally, like everybody's going to be impacted by it. I was just with a team of over 100 Flymates in Europe, and you have people saying like, hey, I don't know if as an engineer, my kid can become an engineer in the same way I became a software engineer, right? Like the world may be different, is going to be different, right? Like, and so I think it's going to disrupt pretty much everything. I mean, it is as revolutionary to me as, the initial internet, the shift to cloud, like pick your topic, the mobile device, right? Like it is one of those iconic moments that I think it is really going to change what companies need to execute, what tasks you actually do. I think people are going to have a whole series of tools and processes that they use to be better and faster. One of the Flymates asked me, so in this world, do I have to work harder or smarter? Which I thought was a great question. And I said, I actually think we all have to look at ourselves and say, do I need to work harder, smarter, or different? And that I think is the challenge, right? Is like you have to look at that and say, like, if you just keep doing what you've been doing for the last decade or 2 decades, you're going to get lapped by others, right? Who use tools differently, who work differently, prioritize their calendar differently, are just more efficient. And so I think there's a weird combination of everybody got to kind of look themselves in the mirror and ask those questions, because just doing what you've done for the last 10 or 20 years, I don't think in the AI world is going to give you the same result. I think people are going to continue to do amazing things with the technology. And of course, we're looking at things like data. We're looking at things at the way we engage customers. It's even been fun for us to apply it to things like our investor relations Q&A and all these other things that we can do to sit there and say, we have so much information out there. How do we create resources so that Flymates can get questions answered quicker, investors can get answers quicker without as much kind of searching and hunting for the answer. And so there's a lot of, I think, real operational transaction monitoring in our payments business. It's a huge game changer for how we look at transaction monitoring and automation.
So what advice would you have for founders, CEOs? You've seen things from pretty much like Series A through publicly traded companies. So what advice would you have for that journey where they're that B round, whatever, earlier stage round of being the CEO of a company?
Yeah, I mean, it is an evolution. I mean, I go back and I'm like, it is quite unique to have that level of view across it. And I would say, if you probably talk to my chairman or, who's been with me the whole run, I joked with him when I became CEO, I didn't want 2 jobs I didn't know how to do. So I asked him to become chairman. And, he'd probably say I'm not the same CEO I was 10 years ago. Right. And I've had to completely evolve. And I think part of it is about how do you make sure you're around the right um, uh, stakeholder group to help you evolve. I can remember back joining my first like CEO group, and I was actually run by Boston person, Ann Mitchell, who was great. And she was running this group, and she actually kicked me out of the group eventually, like a year in. And I was like super offended originally. And I was like, what do you mean I got kicked out? And she's like, no, you didn't get kicked out. You got graduated. And her point was, there was a point in my evolution where the value to that group of CEOs was not going as bi-directional, right? Like my business was either growing too fast or got to a certain size where it was too different. And her point was you have to go find the people that can give you, as much value as to what to expect in the next part of that journey. And that was hugely valuable advice, right? Like, and frankly, a lot of the CEOs that I got to meet as part of a different group here in Boston were critical in navigating, the scale up or navigating the IPO or COVID. And they were people that had run much bigger companies than me that I never would have thought I should even get to know. But I think it is important to always, it's a lonely role. A board is there for a certain, set of functions. And sometimes if you have a great board, that can help you a lot, which I was fortunate to have. But I think if you're an early stage CEO that's trying to go through that scale up, you got to have a great network of people that have either been through it, angel investors, operator on your board, something that lets you get that perspective, because the whole company is changing so quickly, and the things that you have to transform can be very quickly overwhelming. It's a quick evolution.
Well, so building a great team is obviously very important, top down, but your leadership team, like how do you go about hiring for, the executives at Flywire?
Yeah, I would say we're very hands-on. I will tell most of my execs, like if you're not out there on LinkedIn, like searching yourself. And so I'd say most of the execs at Flywire, I personally recruited through, persistence in LinkedIn, hunting. And I think that matters, right? I think, when you're looking for leaders, like, I think it's easy to go run to a search firm and hire a search firm and, hide behind the search firm. But you also know, like, the whole experience is being filtered by that too, right? So, like, if you are going to use the company money to go hire anyone on your team, I think it's really critical that you look and say, hey, that's part of my responsibility to make sure I use all these dollars in the right way, get the best person I can get. And so that's critical to how we look for execs. And some would say it's inefficient, maybe, but like I look at it and say it's critical because you got to find that person that is going to fit in culturally, that has the skill sets, that isn't getting information filtered to them, two or three layers before it gets to the actual hiring team or the hiring decision. And I think that's part of the reason we've had the success we've had at bringing in great execs and helping us along different parts of the journey.
And if you look at your leadership team, they've been there a long time. Like Allison, your CMO, I know her well. She's been with you for many, many years of this journey.
Yeah, yeah, and I was, she'll tell you the story. I, was super persistent for probably 12 or 18 months, right? Well before I even thought I, could get her. I was, trying to get her to go to coffee, trying to get her to go to lunch. And so I think there's something to be said for knowing the talent in your area, either the sector you're looking for or geographic area, depending on what you're looking for. And just, like that's part of the data you need. Like, how do you talk to great people and understand how they do their job? And it'll start to identify where you have kind of game changing opportunity inside the company as it evolves. And the key is to then be able to go get those people and get them to join and get them on a mission. And she's one of many that have been great.
All right. Three apps you can't live without. Can't be calendar, email, or Slack.
Probably X is probably on the list. It's like you feel like there's so much happening in the world. That's the only place you can find it at that point. Uh, my next one is probably this is super bad, but it's probably true. It's probably the Marriott app, which is I'm a big Marriott guy, and so like constantly work related stuff and personal stuff. Although funny story, the only thing I don't like about it is it tells you how many days you've spent at a Marriott. So I spent like 3.5 years of my life in a Marriott hotel, which means mostly away from my family. So I've always said it's like
Uh,
the wrong KPI to show me, but the Marriott app, I'm in it all the time. Um, and if I had to pick another one, uh, sadly, it's probably the Amazon app. Again, it's just packages are constantly arriving, and we have 4 kids, and so everybody's ordering something, and we always are forgetting something and need it. So those are probably my three.
all right. Podcast or book recommendation for entrepreneurs.
Oh, probably a book recommendation. Uh, um, the hard thing about hard things. I mean, it's kind of maybe cliche, but it was probably the one book as a first time CEO in my first like 3 months, 6 months of being a first time CEO, where I was like, holy crap, like it's a playbook for so much as a first time CEO. So that one is big on my list. Uh, Another one I like is Sleep. There's a book that just focuses on the evolution of sleep and why sleep's so important. So that's kind of my more recent guilty pleasure. But um, those are my two.
Well, you mentioned wartime when you were talking about the pandemic years, and I'm like right away I was thinking hard things. So that all makes sense. What do you like to do for fun outside of work?
We're big travelers. We're skiers. So usually you're finding us up in northern New England skiing on the weekend with the kids and getting four boys outside so they get rid of all that energy. And then we're big travelers as a family. So either we're on, skiing or on the sports fields or we're traveling as a family. That's usually what we're up to.
Awesome. Well, Mike, thanks so much for taking the time to walk us through your background story. Obviously, all the great work that you and your team are up to at Flywire, and obviously all the great advice.
I appreciate you having me. It was a lot of fun.